Hello, and welcome to Introduction to Fiduciary Funds. My name is Christy Colgel with the Local Government Support Team here at SAO. We have a full agenda today, starting with defining fiduciary activities, a brief overview of the types of fiduciary funds, determining fiduciary activities, and fiduciary coding and reporting. Let's start with what fiduciary activities are. Fiduciary activities are assets that a government is managing or investing on behalf of others, including individuals and governments. We use fiduciary funds to report these activities. Since we know we use fiduciary funds to report fiduciary activities, let's do a quick overview of the types of fiduciary funds. Within the fiduciary funds, we have 4 types with 1 sub-fund. We have 3 trusts: the investment trust funds, pension and OPEB trusts, and private purpose trust funds. There are special criteria for each of these trusts, which we will get into in a moment. The last type of fiduciary funds are the custodial funds. These are our non-trusted funds and include the sub-fund External Investment Pool Fund. In Washington, only counties are expected to have the External Investment Pool Fund, since they are the only governments that are authorized to sponsor an external investment pool. If you would like more information about fiduciary funds and the other types of funds that governments report, use the QR code on screen to watch our Introduction to Funds video. Fiduciary trusts have special criteria that must be met to be reported as trusts. The following items are the criteria for fiduciary trusts. The assets must be administered through a trust or trust-like agreement in which the government itself is not the beneficiary. Dedicated to providing benefits to recipients in accordance with benefit terms, and is legally protected from the creditors of the government. That is the criteria for reporting a fiduciary trust. But what happens if you have fiduciary activity, but it doesn't meet the trust requirements? You report as a custodial fund. As with all fiduciary funds, this fund type has some special items. For business type activities, if the assets are normally held for less than 90 days, then fiduciary funds and fiduciary reporting are not required for those resources. If your transaction has multiple components, then each of the transactions needs to be analyzed. Let's have a quick example of this. Under RCW, which is state law, there is a local and state split for the concealed pistol permit fee. The $18 that goes to the state would be fiduciary, but the $18 that goes to the local government would be revenue in their own financial statements. Now that we know where we report these items, let's determine what we report. We will take a quick look at the Determining Fiduciary Activities flowchart. While the flowchart was created by the Governmental Accounting Standards Board, or GASB, we do recommend the use for all governments because it gives a step-by-step visual guide for the determination. We will then go on to some examples to walk through and see how the flowchart works. When reporting fiduciary activities became more uniformed and the ways that assets can be fiduciary was added to in 2020, the Governmental Accounting Standards Board, GASB, created a flowchart that systematically walks governments through the different options. This chart is broken up into 3 different sections. One section for each way a transaction could be a fiduciary activity. While GASB prescribes GAAP basis accounting, we use the same rationale to determine fiduciary activities for our cash basis governments. Therefore, we recommend using this flowchart to all governments. Here is the first part of the Determining Fiduciary Activities flowchart. This one will help you determine if you have a fiduciary component unit or if you need to dig deeper into the determination. Since we do not see fiduciary component units often in Washington, we are not going to spend a lot of time reviewing this portion of the flowchart. The first question in this portion of the flowchart separates out the pension and OPEB transactions. After that, we separate out the portion of the transaction that is the reporting government's own activity. Then we look at non-exchange transactions and grants to see if the reporting government has any administrative or financial involvement. Finally, we determine if the transaction is included in one of the non-pension OPEB trusts, a custodial fund, or in the reporting government's primary funds. The third portion of the flowchart is for pension OPEB activities and if they should be reported as a pension OPEB trust fund, custodial fund, or in the reporting government's primary funds. Now that we've seen the flowcharts, let's look at a couple of examples. As a reminder, these are just examples and your specific circumstances may change the conclusion. We will go through a special purpose district investment that is in the SPD's name, but held by the county, a municipal retirement plan that includes other governments, the state levied leasehold tax, and construction retainage. Starting with the special purpose district having an investment in their name, common scenario for this is that a county, in their treasurer capacity, has a special purpose district that has requested a specific certificate of deposit, CD, for their investment. The county makes the investment with only the special purpose district on the CD, but still controls the assets in their treasurer capacity. Let's walk through the flowcharts and determine if the county should report this as a fiduciary activity. Starting at the first part of the flowchart, we need to ask ourselves if the asset is held by a legally separate entity that meets the definition of a component unit as defined in this section. While the special purpose district is a legally separate entity, it does not meet the requirements to be reported as a component unit. Therefore, the answer is no. With a no answer, we move to does the government control the assets? In this case, yes. Since we are looking at the county's perspective and the county controls the asset, therefore we would go to chart 1A. On chart 1A, we are asked if the assets are held for pension or OPEB arrangements. The answer here is no. This is just a regular certificate of deposit. That moves us to if the assets are derived solely from the county's own source revenue. The answer here is no, since the money is in the SPD's name and the county is just acting as the treasurer. Our next question is if the assets are derived from government-mandated non-exchange transactions or voluntary non-exchange transactions. For the county, this is a no. We then move on to are the assets held in a trust or trust-like arrangement? And the government itself is not a beneficiary question. The answer in this case is yes. Since the investment is in the SPD's name, the county does not benefit from the investment. And since the investment is in the SPD's name, the investment is protected from the county's creditors. This meets the criteria for reporting as an investment trust fund. With a yes here, that ends the flowchart. stating this transaction is fiduciary from the county's perspective. After going through the flowchart, we have made the determination that a county in their treasurer capacity would report a CD in a special purpose district's name as a fiduciary activity, specifically in an investment trust fund. Moving on to our second example, a city is administering a pension plan through a qualified trust, which also includes money from other municipalities that are participating in the city's pension plan. Our first question is, are the assets held by a legally separate entity that meets the definition of a component unit as defined in this section? Since the city is administering the pension plan themselves, the assets are not held by a legally separate entity. Therefore, our first answer is no. Our next question is, does the government control the assets? The city controls the assets since they are administering the trust. Therefore, our answer here is yes, and we move on to chart 1A. Our next question is if the assets are held for pension or OPEB arrangements. In this case, the answer is yes, which moves us to chart 1B. Our first question for pension and OPEB plans is if the plan is within the scope of other GASB guidance. In this case, since the plan is in a qualified trust under GASB Statement 67, the answer here would be yes. Therefore, the pension plan would be reported in a fiduciary pension and OPEB trust fund. After going through the flowchart, we have made the determination that a city that is administering a pension plan through a qualified trust that holds money for other municipalities that participate in the pension plan would be reported as a fiduciary activity and in a pension OPEB trust fund. Now that we've covered more unique circumstances, let's look at the custodial funds, since most fiduciary activities fall into this fund type. In our third example, a city leases a building that is reported in the governmental funds to a private company. The city includes the state-levied leasehold tax in the rent collections and then remits the amount to the state every month. How does this transaction fall into the custodial funds, and does it fall into the 90-day exception? Our first question is, are the assets held by a legally separate entity that meets the definition of a component unit as defined in this section? Since the city is collecting the leasehold tax for the state, the funds are currently not held by a legally separate entity. Therefore, our first answer is no. The second question is if the assets are associated with activity controlled by the government. Yes, the city receives the tax and is holding the monies in their bank account until the monies are remitted to the state. Therefore, we move on to chart 1A. The second question is if the assets are held for pension or OPEB arrangements. These are not pension or OPEB funds, so we move on to the third question. Our third question is if the assets are derived solely from the government's own source revenues. In this case, the answer is no. These taxes are levied by the state through the RCW, therefore they are not solely from the operating city's own source revenue. The next question is if the assets are associated with activity from either government mandated or voluntary non-exchange transactions. Yes, these monies are from derived government mandated tax revenue. We then move on to if the assets are from pass-through grants for which the government does not have administrative involvement or direct financial involvement. No, these monies are not from a grant, and the city does not have administrative or direct financial involvement. They are just doing what the state requires them to do, which is collect the tax and remit. Our next question is if these assets are held in a trust or equivalent arrangement, and if the city is a beneficiary. The tax is not put into a trust, so the answer would be no. The next question is if these assets are for the benefit of individuals and the city does not have administrative involvement or direct financial involvement. The answer here is no, since the state is not an individual. The next question is if the assets are for the benefit of organizations or other governments that are not part of the city, and if the city provides goods or services to the state to receive these funds. The answer here is yes. These monies are for the benefit of the state. The state is not part of the city, and the city did not provide goods or services to the state for these funds. These would be reported as a custodial fund. But remember, we talked earlier about a 90-day exception in custodial funds for business type activities. Does that apply here? So we determined that this is a custodial activity. Now we need to decide if we report, or since we remit every month, does it fall into the 90-day exception? No, this does not fall into the 90-day exception because it is reported in governmental funds and the exception is for business type activities only. So with this transaction, it would be reported in the custodial funds. Let's look at retainage for construction. A county is building a new courthouse and is required to withhold 20% of invoices for retainage. The retainage will be paid to the contractor once construction is complete. Is this a custodial activity? Our first question is, are the assets held by a legally separate entity that meets the definition of a component unit as defined in this section? The county is holding the retainage, therefore the answer is no. Our next question is, does the government control the assets? Since the county is receiving the fees and is holding the monies in their bank account until the contracting party meets their obligations, the county does control the assets. Our next question is if the assets are held for pension arrangements or OPEB arrangements. These transactions are not in relation to pension or OPEB arrangements, so we move on to the next question. Our next question is if the assets are derived solely from the county's own source revenue. The answer here is yes, because these deposits could be revenues for the county if the contractor does not meet certain criteria. Our conclusion for the retainage from a county that is building a new courthouse is that the monies are not fiduciary and should be reported in the county's governmental or proprietary funds. Moving on to fiduciary coding and reporting. Since fiduciary funds are unique, they do have some special GARS codes, mainly the 389 and 589 GARS codes. Let's go through each code and when we use them. Our first codes are the 38930 and 58930, custodial type collections and remittances. 38930 is used for the collection or receipt of funds on behalf of others in a custodial capacity, and 58930 is for the remittance of amounts originally collected or receipted on behalf of others in a custodial capacity. These codes would be used for items like the collection and remittance of leasehold tax for the state. Our next set of codes are 38940 and 58940, custodial type deposits and disbursements. This may sound the same as our last codes, but these are for when the collecting government is acting as treasurer. 38940 is used for the receipt of funds from other entities to hold for which the government acts as treasurer. And 58940 is for the directed disbursements of funds from other entities for which the government acts as treasurer. These codes would be used for items like the receipt and disbursement of special purpose districts' monies when the county acts as their treasurer. Fiduciary funds have their own interest earnings code as well. This is 38960, custodial type interest earnings. This is used for the interest and investment gains or losses on funds invested on behalf of other entities for which the government acts as treasurer. Let's see some examples of when to use each of the codes in fiduciary funds. A county collects $100,000 in property tax for special purpose districts and then moves the money into the external investment pool. At the end of the year, the investment pool has earned $80 in interest. What is the GARS code for the collection of property tax? Since the county is acting as a treasurer for special purpose districts, we would use GARS code 38940, custodial type deposits, for this transaction. What are the GARS codes for moving the property tax to the external investment pool? This one can be tricky. You will notice that there are no transfer GARS codes for fiduciary funds. Therefore, we need to use the disbursement and deposit GARS codes. Therefore, when we move the property tax out of the custodial fund, we'll use GARS code 58940, custodial type disbursements. And when we place the funds into the external investment pool, we'll use GARS code 38940, custodial type deposits. Now we need to account for the investment income. So what GARS code do we use for that? We would use GARS code 38960, custodial type interest earnings. Our next example is for a governmental activities special purpose district that collects $5,000 in leasehold tax for the state. At the end of the quarter, the $5,000 is remitted to the state. We know from our previous example, since this government reports only governmental activities, this activity is reported in the custodial funds. So how do we receipt these funds? We use GARS code 38930, custodial type collections. We use this code instead of 38940 since the special purpose district is not a treasurer for the state. When remitted to the state, what would be the GARS code for remitting the leasehold tax to the state? We would use 58930 custodial type remittance. For our cities, towns, and counties that collect court fees for the Administrative Office of the Courts, AOC, there are special codes, and these must be reported in fiduciary funds. SAO only prescribes the 386586 portion of the GARS codes and delegates the prescription of the rest of the GARS codes to AOC. For more details on AOC's required GARS coding for their reporting, please use the QR code on the screen, which will take you to the resource for GARS codes as prescribed by AOC. For cities, towns, and counties that report court functions, we have specific guidance for accounting for the 3 types of court functions: reporting your own court, contracting the court function to others, or providing court services to others. Since court transactions are extremely varied and complex, we would recommend using the QR code for your basis of accounting to reach the specific guidance in the GARS manual. Thank you for taking the time today to learn about fiduciary activities and reporting. If you would like some more help on a specific transaction, please feel free to submit a help desk ticket and our fiduciary experts will be able to assist you.